Until 4, you're talking with Amanda Blair.
This is our fortnightly segment with Peter Evers from People's Choice Credit Union, and he always brings in an expert. Today, Duncan Kimberlin comes in, who's a branch manager. Notice how I said branch then. You know that I've become South Australian finally after 15 years. See, being a Victorian, I'd say branch manager, but branch manager for People's Choice Credit Union. Welcome, guys, to the show.
Good afternoon.
Today we're talking about property investing. Now, obviously, there's a lot of talk about shares. The other day, I don't know, share people were talking about shares and saying that they were plummeting and that they had lost whatever share points that day, and it was all doom and gloom. And, of course, we've heard stories about retirees who have sunken all of their money and all of their superannuation has gone into shares only, and now they are having to return to the workforce because they've got no money to retire on. Property is something that I'm a bit old school, Duncan. I'm a bit old school. I think that property is good and it's solid, and you can see it, and you can touch it, and you can feel it. And in a market like Adelaide, it doesn't have much fluctuation. Is property investing still something that, from a bank's perspective, you would advise your customers to do?
Yeah, certainly. Thanks for the question there, Amanda. Look, it's I think it's realistic to say that in just recent times there has been a bit of a slump in the market in Adelaide, but in terms of long-term investment, it is definitely something that we see as a good investment moving forward. If you're looking at some short-term gains, perhaps there could be other avenues for you to look at, but long-term investment is definitely something that we would recommend. Historically, it is a lot less volatile than shares, so that is very attractive for a lot of people, as you just mentioned.
Yeah.
And it's also tangible, so it is something that you can actually physically see and touch, which, again, is appealing for a great number of people.
If I didn't have much equity in my home, i.e. mortgaged up to my eyeballs, Peter, I'm looking at you, but still wanted to have an investment property, can you do that in that if you go and get an investment property, I mean, you can find investment properties around now where if you get tenants in, they pretty much cover the mortgage. Is that something that you look at People's Choice Credit Union?
The rent may pay for that, depends on the price of the property you're looking to buy.
But a lot of the time it does.
A lot of the time it does, but also it depends on your own personal situation, and we would look at your income levels and your ability to actually pay the mortgage as well as taking the rent into account.
If there was no tenants in or anything like that?
If there's no tenants in, because tenants don't always stay all the time, and you can have unexpected bills come along, whether it be repairs and maintenance, council rates and so on. So you've got to take into account the whole picture, and that's where someone like Duncan can work that through with you and give you the right advice and what you can afford and whether you want to enter the property investment market.
And, you know, people think that you've got to be rich, don't they, Duncan, to go into the property investment market. But I know some people who have really moderate incomes, but they've just been really smart about the way they do it, smart about what they buy, and they let it slowly tick over in the background, and then, you know, and hopefully in 30 years' time they can just cash it in. Yeah,
certainly. Look, that is a fairly common misconception that you do need to be wealthy to own an investment property, and look, that's definitely not the case. There are, I guess, a couple of different goals that you can be trying to achieve when buying an investment property. You can be looking to get a cash flow, or you could be looking at long-term growth. But look, that's really where if you were to sit down with a specialist, we can actually work out a scenario specific to your needs.
Is it tax deductible?
Yeah, look, there are a lot of tax benefits when having an investment property. To list just a couple, the interest on the mortgage is fully tax deductible. You can also claim depreciation on the investment property itself and on improvements to the investment property as well. So that is something that a lot of people do actually go into an investment property for, is to actually maximise the tax advantages.
And what about getting a positive cash flow?
Yeah, look,
how does that work?
That it really depends on your strategy. So I touched on a moment ago that there are a couple of different strategies. One is to get a cash flow. So that basically means that the income that you're receiving, the rental income that you're receiving, outweighs what your mortgage repayments are at the end of the day, so you have a positive cash flow. That is one strategy, that people purchase investment properties with the aim of actually drawing an income from the property.
But to do that, you want to make sure you don't pay too much for the property in the first place. So
yeah,
exactly. You should go and get some advice from a real estate agent on what rent you might receive, how many weeks a year that you expect it to be rented, what your council rates and all those other things might be incurred, so that you can work out on my rent base what I might receive on my rent, what my expenses might be, and the net difference is when you're positive. The higher the mortgage, of course, the higher the interest payments. So you've got to balance that up into a positive cash flow.
And what about investing in property, Duncan? Is it something that offers more long-term gains? Like, it's not necessarily something, well, I don't think anyway, but I'm not a property investor, but I don't think it's something that you go into, you buy a property, you have it for 6 months, you flip out of it, you make money from it. Like, I think those days are sort of long gone, aren't they?
Yeah, look, it depends on what the strategy is. I mean, it's good to actually sit down and work out your strategy up front on what you're wanting to achieve. But in the current market, that's how we foresee the majority of investors going, is long-term investment. So purchasing the property, looking for that long-term growth. I mentioned at the start that it is realistic to say that the market is in a bit of a downturn at the moment. So it is a long-term investment.
We've got
I was going to say, the market being down is also an opportunity for those who have got a little bit of equity in their house to actually borrow now, negative gear, and buy a property at a lower price with a long-term view for capital appreciation.
Absolutely.
Not in the short term, because the forecasts aren't house prices in Adelaide are going to move up materially in the next year or two, but over the 5 to 10 year cycle, we know historically property will move up.
Yeah, absolutely. And capitalise on it now while the market's reasonably flat. We've got an email here that we got last week from someone wanting to know about either reverse mortgages or taking the money that's in their home and using it to buy their children a flat. They said in the email that their kids are at university. They've got twins. They've just started at university this year. They're still living at home, but the kids are at that point where they kind of want to move out, but they can't afford to. So the parents want to help them out. And they wanted to know whether or not they do a reverse mortgage or whether they just use perhaps the equity in their home to purchase a flat or a house or whatever for their kids.
Certainly. Well, look...
And I'd imagine that'd be a fairly common scenario when you consider that, you know, you can't really afford to buy your own home these days when you're at uni.
Go on, Duncan, you go.
Sorry, Peter. It is a fairly common scenario. We do come across it all the time, and there are quite a few different options available to someone in their circumstances. The most common thing that people would do in that sort of a scenario is use the equity in their house in lieu of a deposit towards purchasing a new property. So historically, when you purchase a property, you would usually come up with a deposit, pay the deposit towards purchasing the house. And a general rule of thumb at the moment is if you're doing that and you don't own any other property, minimum sort of deposit to be looking at is about 11% all up. So that's covering all of your fees, the deposit, etc. If, on the other hand, you already own the property, as these callers did, you can actually look at using the equity in your current house instead of paying in a deposit. And the equity is really the difference between the value of your property and the existing mortgage that you have on that property.
Right, okay. So, and what sort of fees and stuff come out of that for them?
Yeah, well, look, I mean, you do have the government fees associated with purchasing property. So you have transfer stamp duty and land transfer registration. They're the large fees associated with buying a property. Other than that, you have fees that the financial institution will charge in actually setting up the loan, but comparatively speaking, they're fairly minimal, and they do vary from financial institution to financial institution.
And an important consideration if parents do want to buy a property for their children to live in is if they expect to get a tax deduction for it, they need to charge a market-based rent.
Oh,
so you start to then,
that wouldn't go down well.
So you then can't claim the interest on your loan if you're not charging a market-based rent. So you should get tax advice as well if you're thinking of doing something like that.
Absolutely.
So one is to provide the children a sort of a good place to live in independently, but then you can't necessarily claim the tax deductions, so you need good advice around that as well.
And can everyone get an investment loan? Like, do you guys at People's Choice Credit Union sort of cap the age? If I, walk in at 50 and say I want a loan that's going to go, or 60, or 70 really, do you cap it these days? Because they used to in banks, didn't they?
A long time ago.
Yeah.
But not anymore.
Yeah, look, we don't discriminate now, so regardless of age, if you meet the other qualification criteria for getting a loan, there's no other limitations.
And I suppose if it all goes belly up, you always own the property anyway, don't you?
That's where a
That's
mortgage
one thing.
becomes quite important in the security equation for the lender.
Oh, that's fantastic. Now, if anyone has got any queries at all about property investment, can they just go into any branch of People's Choice Credit Union and make an appointment to see someone like you, Duncan?
Most definitely. Now, we have a range of home loan specialists and branch managers in all of our branches that are fully qualified to help people with home lending. And we also have a range of mobile home loan advisors that can actually see people at their home as well if that's more convenient
Oh,
for
so you
them.
go out to their house. Geez, that'd be nice.
We do.
It's very
Cup of
convenient
tea?
for a lot of people.
That'd be great.
Either the house or their workplace, if it's convenient for them. So we like to be where our members would like us to be to help them.
How good's that? Happy with that. All right. Do you have a phone number, that People's Choice Credit Union, that people can call? Do you have a hotline number or something?
131182, our call centre, would be the best place to initially make the call, and they can arrange an appointment with you as well.
And can you ask for Duncan specifically? Can you go, I want Dunk to come out to my house, or are you just in the branch?
Look, I myself am just in the branch, but we do have a range of home loan advisors which are specialists and would be happy to come out to someone's
Do you get a
home.
little funny car, like a little green car or something?
You get a car if you are a mobile home loan advisor
And
with
is it a
People's
little
Choice all over
colour?
it.
Yeah, little
It's a
coloured
white car with people on the side.
Cute. A little house or something on the top?
No, a little bit better. Not quite a house.
We
People.
ne-
We put people on it.
Yeah, people. Of course we do. We put people in houses. Hey, guys, thank you so much for coming in. Duncan Kimberlin, who is from People's Choice Credit Union, and Peter Evers, who is the General Manager. We will be back in just a moment.